The fund accounting cycle starts with the receipt of subscription and redemption information from the transfer agent. The transfer agent, who is the custodian of shareholder book of records for the mutual fund, provides the accountant with the details of fund's share activity. The fund accountant will record these transactions in the accounting system. In an automated environment, these transactions are recorded through the system jobs, which will process the files received from the transfer agent and post these entries into the accounting system. The data on subscription and redemption by investors is crucial for maintaining the accuracy of the fund's net asset value. In mutual fund accounting world, this is known as cap stock activity. Capital stock represents the funds raised by the company from investors through issuance of shares. The accountant will verify the total capital balance, ensuring it reflects all capital transaction activities. They will also reconcile the mutual fund's internal records against the records held by transfer agent. Any discrepancies, if found, are investigated and reconciled to ensure the integrity of fund's financial data. The next step in the process is accounting for the expenses. It is critical to ensure that the money spent by fund is carefully accounted for. This process begins with the calculation of posting of expense accruals. Accruals are a way of acknowledging that the fund may not have paid the bills yet, but they owe the money to the services received or for the taxes due to the government authorities. It's like noting down the amount you need to pay at the end of the month. This provides a more accurate picture of the fund's financial health at any given moment. The fund accountant then moves on to process expense payments. Each invoice is reviewed and matched against records. Once verified, the payments are carefully executed, ensuring that all vendors and service providers are paid for their services. The accountant then makes a thorough verification of the expense posting. It's like cross-checking your bills after shopping. Every expense entry must be justified and confirmed against the corresponding invoice and payment details. This verification acts as a safeguard against errors and inconsistencies that may otherwise get unnoticed. Once the expenses have been accounted for, the next step for the fund accountant is to record all the income. When a fund owns bonds, they come with the promise to pay interest. Similarly, the stocks in the fund's portfolio often pay dividends. These payments are not always received immediately. They may be merely anticipated based on ownership. The fund accountant would make postings for the interest amortization and the dividends receivables. Interest amortization involves spreading out the cost of the bond premium or discount over its life, affecting the interest income recognized in the book of records. Sometimes when dividends are paid out or interest are paid out in foreign countries, the fund may be subject to a withholding tax, which according to tax treaties should be refundable in future. So the fund accountant would calculate the tax reclaim and create an entry in the accounting system to track the tax reclaims. The next step in the fund accounting process is to account for all the corporate action events for the day. Mandatory corporate actions like stock splits, name change are processed by the fund accountant. The fund accountant will make transaction entries to account for any proceeds received from a tender offer or any payments that are made for a rights issue in the fund's book of accounts. Now, you may be aware that funds are required to distribute their capital gains every year. So in case the fund has declared any dividend and it is being distributed, then the fund accountant would be responsible for processing those dividends. Fund accountant is responsible for posting any of the dividend distributions made by the fund. Now, when these dividends are distributed to the fund, some investors may opt for reinvestment. A fund accountant is also responsible for posting all those reinvestments made by the investors. Fund typically uses the services of the registrar and transfer agents to process dividends and to process the reinvestments. However, the fund accountant has the ultimate responsibility of posting these entries into fund's book of records. Now, the investment managers managing the funds would be trading on a regular basis. So the next step for the fund accountant is to review the trades for the day, which are posted in the accounting system. This is done for accuracy and monitoring the trade settlement. As you may be aware that some of the trades may not settle on the value date or the contractual settlement dates. These trades fail to settle, perhaps due to timing mismatch or discrepancy in the trade details. Failed trade requires immediate action to locate and rectify the issue. The fund accountant makes necessary adjustment in the journal entries, the financial ledger, to reflect the reality of the situation. they may need to cancel and rebook the trade. These adjustments are crucial to ensure the fund's books remain the single source of truth. Once the trades have been reviewed, it's time for reconciliation. As you are aware that accounting book of records are maintained by the fund administrator or the custodian, whereas the investment book of records are maintained by the investment management firm itself. The next step in the process is to do a complete recon between investment book of records and accounting book of records to check if any trades are missing in the two book of records. Any exceptions found are resolved talking to the fund accountant with the investment management firm. The reconciliation would also include a sub-ledger to ledger reconciliation, holding and cash reconciliation with the custody book of records or the custodian. This is because the actual investments of the funds and the cash records are maintained with the custody bank. Now, as you know that exchange rates can impact the value of receivables and payables in case of global portfolio. Mark-to-market jobs are run to adjust the value of payables and receivables. The new exchange rate is also applied to spot and forward contracts to reflect the true value of the portfolio. Next step is one of the most important when it comes to calculating the net asset value. Pricing data is created for the securities of interest using a vendor pricing feed. There are multiple pricing data providers. The fund would have finalized a primary and a secondary pricing data provider. The prices are verified for data quality, and if everything looks good, then the prices are applied to the fund's holding to calculate the market value of the securities in the portfolio. This process is commonly known as fund pricing. Once the securities are priced, the changes to the unrealized gains and loss for the securities held by the funds are calculated. The total value of funds assets is calculated, and the total expenses for the funds is deducted from the total assets of the fund to calculate the net asset value. These changes are compared against benchmark and similar funds for comparable movement. The management fee is calculated on the total net assets of the fund. The last step after calculating the net asset value of the fund is distribution of net asset value to media houses, investment manager, transfer agents, and other interested parties. This NAV which is distributed is something which we see in the newspapers the next day. So this was a quick overview of the fund accounting process. Next, we will look into some of the examples and calculate the net asset value based on the data.